We may have turned the corner. You know, we're in the 30-some-odd year of a bond market rally here. I date it from October of 1982 when the 10-year was at 14%. And we went down to, 1.5 or something, and now we're on, it looks like we might be coming out of that 3-decade cycle. If we're coming out of that 3-decade cycle and you spent the last 7 years searching for yield in your portfolios, you might want to think about unwinding everything you put in there during the search for yield, because it won't work when the search for yield is over. So we've already seen high yield bonds sell off a little bit with the spreads widen. So if you believe the story that we're going to issue a lot more debt in the United States, you've got to be worried about the U.S. bond market. If you're worried about the U.S. bond market, your hurdle rate on equities is rising, so you're worried about equities, and there's very volatile market conditions that I'm setting up for you here. On the currency side, I did mention that the euro looks under some pressure. The Japanese yen looks like it could come under some pressure too. If the Fed really does what I'm saying on December 14th, the Bank of Japan really wants a weaker currency, and the euro, it's going to be more about political risk, but we still see those currency moves. Now, in the emerging market world, once you get away from Mexico, this actually could be pretty good news for some of these currencies. Brazil, for instance, pays you 12% or something on the currency. So if you can borrow money in the United States for 1% and invest it in Brazil for 12%, you're earning almost 1% a month if the currency is stable, and if more people like that trade, the real will actually go up, which is what it did this past year. As you make more money, you got to shrink your positions and manage the risk on those things. But I do think that if the United States spends more on infrastructure and kind of pushes out a much more stimulative fiscal policy, that's probably good for emerging market countries' growth. So I'm not in the camp that we're toasting emerging market currencies here. We're just probably stronger dollar against the yen and the euro, and after that, I'm not so sure. And the peso, Mexican peso.